But now the Fed came out and surprised a lot of people with its language. It basically said, if we don't get evidence soon of a big pickup in the economy, a sustainable increase in the economy, that the Fed is going to have to take action. And of course, the only tool in its arsenal is to print money and buy bonds and try to goose the economy with the same monetary stimulus that created the problem. In fact, that's how I know that the Fed is going to do QE3. The Fed is saying that if we don't get a quick turnaround in the economy, they're going to do QE3. Well, we're not going to get a turnaround in the economy. In fact, the Fed has made that impossible. As long as the Fed is artificially stimulating the economy with cheap money, it will never recover. Therefore, the Fed is going to have to continuously stimulate it if it's going to stimulate the economy if it doesn't grow, because it can't grow as long as it's stimulating. So it's a self-perpetuating spiral. I've compared it to trying to put out a fire with gasoline, and you're claiming that, well, you're going to pour as much gasoline on the fire as it takes, and until the fire goes out, you're going to keep putting more gasoline on. Well, it's never going to go out because the gasoline only feeds the fire and it gets bigger. Well, that's what happens with our economy. The QE fuels all the malinvestments that underlie the economy and that are preventing it from growing. In fact, they might as well put QE4 there or QE5. I've been saying we're going to have more QEs than Rocky movies, because I know as long as we're doing QE, we'll never recover, and that guarantees more QE until ultimately the supreme casualty in all this is a complete collapse of the dollar. The real sovereign debt crisis that's coming, the real currency crisis that's coming, is not the one everybody's worried about in Europe, but the one nobody's worried about in the United States. Now, we did get a temporary rise in the bond market because when traders perceive QE, they know that the Fed is going to come in and buy bonds. And so they want to be able to sell bonds to the Fed, so they buy now. And of course, the Fed buying pushes up the price. But that's just in the short term, because where does the Federal Reserve get the money to do QE3? How does it pay for these bonds? It creates that money out of thin air. It expands the money supply. That's inflation. It creates it. And of course, when the Fed prints money to buy bonds, it destroys the value of the money it's printing and ultimately the value of those bonds. How long will it be before bond buyers figure out that QE3 is not good for bonds, but it's bad for bonds? Because the biggest enemy of a bond buyer is inflation, and the Fed has to create the inflation to buy the bonds in the first place. And ultimately, the only safe haven from QE, and not just quantitative easing in America, but quantitative easing in Europe, quantitative easing in Asia. It's going on all around the world, and investors and savers all around the world are in the same boat, and they're all going to be looking to the same safe haven, and that's going to be gold, it's going to be silver, and I think right now is a great time to buy. As I said, it was a better time a month ago, but you know what? We can look back at these prices. One day, $1,600 gold, $30 silver, it's going to look cheap. But you know what? It's just started to move. It's not too late to buy, but don't wait. Believe me, the higher the prices go, the more reluctant people are going to be to buy, and a lot of people might end up going down with a sinking ship. They think they've missed the opportunity. They think the prices are too high. They stay in dollars, and they just ride it down. Because believe me, the lion's share of the damage is in our future. We haven't really had the currency crisis yet. We haven't had the sovereign debt crisis. The worst is not behind us, it's in front of us.